Welcome to the Riskwiser Zone. I'm your host, Lewis. Today, we're going to dive into the complex world of international relations and its impact on the global economy. The ongoing conflict between the US, Israel, and Iran has been making headlines for weeks, and the latest development is a US blockade of the Strait of Hormuz. This strategic waterway is crucial for global oil supplies, and the blockade has already started to affect the market. According to reports, Brent crude fell towards $97 a barrel, while West Texas Intermediate shed as much as 3.4% to $95.69. The decline in oil prices comes amid signs that Washington and Tehran may revive peace talks. U.S. President Donald Trump announced that Tehran had reached out, expressing interest in working out a deal. Iranian President Masoud Pezeshkian also stated that the country is prepared to continue peace talks within the framework of international law. The conflict has already disrupted energy infrastructure and choked off traffic through the Strait of Hormuz. Saudi Arabia is now pressing the U.S. to drop its blockade and return to negotiations, citing concerns that the move could lead Iran to disrupt other important shipping routes. As the situation continues to unfold, it's essential to consider the potential implications for the global economy. The U.S. blockade has raised economic pressure on Iran, but it also exacerbates the pressure on energy prices, causing more damage to the global economy. The International Energy Agency is set to release its monthly market report later today, which will provide further insight into supply and demand dynamics. We'll be keeping a close eye on this developing story and its impact on the world of finance. The question on everyone's mind is, what's next? Will the peace talks yield a positive outcome, or will the conflict continue to escalate? One thing is certain, the situation remains volatile, and investors are advised to exercise caution. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the heart of the global energy conundrum, where geopolitics and sustainability collide. The ongoing conflict in Iran has sent shockwaves through the energy markets, and Europe is feeling the pinch. With a €22 billion increase in fossil fuel imports since the launch of the war, it's clear that the region's over-reliance on traditional energy sources is taking a toll. European Commission President Ursula von der Leyen has been vocal about the need to scale up homegrown, affordable, and reliable energy. She's championing renewable and nuclear energy as the way forward, highlighting the potential of small modular reactors, SMRs, and the importance of storage and grid connections to unlock the full potential of clean power. Now, some critics might argue that the European Commission has been slow to act on its Green Deal ambitions, but it's clear that the current crisis is a wake-up call for the region. As von der Leyen noted, the impact of this crisis won't be short-lived, and Europe needs to modernize its energy infrastructure to reduce its dependence on fossil fuels. The plan to fast-track approval of electricity grid modernization legislation is a step in the right direction, but it remains to be seen whether EU member states will heed the call. The proposed measures, including coordinated gas storage and joint release of oil reserves, aim to stabilize energy supply and prices across the bloc. As we navigate this complex landscape, it's essential to consider multiple perspectives and avoid knee-jerk reactions. The path to a more sustainable and resilient energy future won't be easy, but it's clear that the status quo is no longer tenable. Welcome back to the Riskwiser Zone. We're coming down to the wire in today's episode, and I want to make sure you're equipped with the latest market insights before we sign off. Let's dive right into it. We've got a trio of interesting stories for you today. First up, it seems like the IPO market is facing some challenges. According to recent data, several initial public offerings have received lackluster responses from investors, with some companies struggling to meet their fundraising targets. This trend has left many wondering if the market is becoming increasingly risk-averse. Next, we're seeing some movement in the insurance sector, particularly with Life Insurance Corporation, or LIC, announcing a bonus share issue. The company will be distributing bonus shares in a 1:1 ratio, which is expected to boost investor confidence. However, it's worth noting that the stock has been trading below its IPO price since listing. Lastly, across the pond, the Federal Reserve is taking a cautious approach to reducing its market support program. Wall Street strategists expect the Fed to slow down its pace of buying short-term treasuries, which could have implications for interest rates and the broader financial system. As we wrap up today's episode, it's clear that there are many factors at play in the global markets. From IPOs to insurance and central banking, it's essential to stay informed and adapt to changing conditions. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.